TDI, moving averages, the cycle. These constitutes the top 5 free trading indicators everyone must use. In the last lecture, we talked about the cycle. In this lecture, let's now simplify this cycle as much as we can. The TDI, or the Traders Dynamic Index in short, is basically an indicator that is used to confirm our entries. Moving averages are there to help us mark our levels. Levels are sometimes subjective, so to remove that, we use these moving averages. The cycle is actually an indicator that is naturally occurring on our charts. We use this to see where we are in the market flow. Let's now go deeper on the charts. So these are the indicators, the top 3 ones everyone must actually use. They help us to find high probability entries. These ones on the main chart are the indicators which we call the moving averages. Those who follow this channel for quite a long time knows all the periods of these. But for the sake of those new followers, we have 5 in yellow, 13 in red, 50 in blue, 200 in white, 800 in dark blue. And the one on my subchart is the TDI, or Traders Dynamic Index. It's actually used as a confirmation too. Therefore, referring to our previous lecture where we were talking about the cycle consists of 3 levels to the downside and 3 levels to the upside, and at level 3 we expect to see a market reversal. And when we are now at that level 3 or market reversal, that is when we incorporate the TDI. So to remove the subjectivity, as I've said, the first thing that we need to see is a 1350 EMA crossover that will be signaling for level 1. In this case, we can see that from this point we had a flow, and on that flow we had a 1350 EMA crossover. The market was chopping, but in that choppiness it was actually confusing to see whether we have made a flow. However, the market went back up to erase all the choppiness or the flow that was issued. But in that region we had a 250 EMA crossover. Therefore, our level 2 is seen with a 250 EMA crossover, like in this case. Therefore, this was a level 2, sorry. After level 2, we expect to see the third level for us to complete a cycle. Level 3 is actually seen as the moving averages fan out away from each other as a way to convince retail traders to take position in the same direction. In this case, we can see the 200, the 50 and the 13 were now fanned out, signaling that we are now close to reversal. After that, we had this last impulse to the downside. However, there is also another skill that you need to learn, and that is only taught in our advanced course. At this point where we expect to see a market reversal, that is where we expect to use the TDI. Well, the TDI is basically a relative strength index, if I can say, that went to a private school. In that case, we can see that at this point we had a lower region and a higher region. However, on the relative strength index, it's actually doing the opposite, which refers to convergence or divergence effect. Whenever there is convergence or divergence effect, we know that we are now at a proper reversal point. Therefore, that's the use of this TDI indicator. From there, we start again our count, and from that point we could have ended a buy at this zone. Our first thing that we are going to do in this count is to look for a 1350 EMA cross, which was issued at this point. From that 1350 EMA cross, we've said level 2 is actually seen by a 5200 EMA cross, which occurred at this point, and level 3 we expect to see these EMAs to fan out, right? As I've said earlier, the other skills are taught in our advanced course. From this point, we can see the 1350 and 200 in a fan out manner, and in that case we reach the level 3 as that point. We actually made money out of that setup, which actually occurred at level 3 of this cycle. This point, we now expect to see a reversal pattern, which in this particular case was an M pattern, and on the TDI it was actually showing us that the relative strength index of euro against JPY is actually dropping. That is why this was a high probability setup, and we actually made an entry. Let's have another example on a different pair. In this case, this is now Euro US. The first thing, as I've said, is to see a 1350 EMA cross, which was issued at this point, a 250 EMA cross for second level, and from there we now anticipate to see the EMAs fanning out, like in this case 1350 and 200 will now fan out to result in this particular trading pattern. And we actually made money out of this particular pattern, and is confirmed on the TDI. The relative strength is also dropping. Let's have another example on a different scenario. In this case, we can also see the same pattern playing over and over again. We had level 1 with the 1350 EMA cross, level 2 5200 EMA cross, and level 3 fan out of these EMAs, and we reach the reversal point. From that reversal point, we now incorporate the TDI to check for the relative strength index. As I have said, we have two scenarios on the TDI. The first one being a divergence or convergence scenario. The second one is to see a relative strength index line dropping, showing us weakening of one currency against the other. In this case, we can see that from this point, which was a high probability reversal point, we started to go down again. On that flow to the downside, we can also start to see again those EMAs giving us the crossovers. We had crossover for level 1, crossover for level 2, and level 3 was a short one, but it was issued. Someone may actually say you haven't been mentioning the 800 EMA. This is actually a reset indicator that is used, or that gives us a bound of where the markets may reset on the higher time frame. So it's basically seeing the higher time frame on the smaller time frames. But we teach most of that stuff in our advanced course, so make sure you sign up to be one of our special members in that particular channel. On this point, we come to the end of this video. These are the indicators that can help you change your odds of trading and try to backtest them and see if you can understand and if you fully comprehend it. See you on the next one.